Plume Network, a specialized RWAfi Layer 1, real infrastructure, or just another temporary narrative. Plume is the first EVM-compatible Layer 1 blockchain built specifically for real-world assets finance, RWAfi, enabling the tokenization and seamless integration of real-world assets such as real estate, bonds, private credit, and commodities into DeFi. The project is gaining strong support through Bermuda licensing, SEC-recognized transfer agent status, and partnerships with major institutions like WisdomTree and Apollo. However, on-chain traction remains relatively modest compared to the hype, while the token unlock schedule continues to create significant sell pressure. 1. Decoding the project. Old wine in a new bottle, or a real revolution? Imagine wanting to invest in an apartment in New York with only $100. In the past, this would have been nearly impossible due to barriers such as multi-million-dollar minimum capital requirements, complex legal procedures, and low liquidity. Plume acts like an operating system that allows the apartment to be fractionalized into millions of digital pieces. More importantly, Plume does not simply store those fractions in your wallet. It allows you to use them as collateral to borrow stablecoins or deploy them into liquidity pools to earn compounded yields, similar to how users interact with ETH or SOL in DeFi. The ultimate goal is to bring Wall Street directly into users' pockets. Plume is not merely a dApp, it is a modular Layer 2 built on Arbitrum Orbit, recently upgraded to the Bold protocol in February 2026. Key difference: instead of forcing RWA projects to handle compliance themselves, Plume integrates modular compliance directly into the blockchain infrastructure. Architecture. Plus, Plume Arc combined with Plume Passport enables TradFi institutions to onboard assets on-chain in just a few clicks while remaining compliant with KYC, AML, and SEC requirements. Nest, a yield aggregation protocol for RWA vaults with a non-custodial model and proof of reserves transparency. Nexus, a data layer designed to standardize and process off-chain data. Skylink, a cross-chain interoperability layer allowing yield distribution across ecosystems like Solana. Assessment. This represents meaningful innovation at the infrastructure level, but long-term success depends on converting asset pipelines into real TVL and revenue. Nest Vaults, Plume's core weapon. Nest Vaults are what truly differentiate Plume from the majority of conventional Layer 2 projects. It is the flagship product that transforms passive real-world assets into productive DeFi native assets. At its core, Nest Vaults is a yield optimization protocol tailored specifically for traditional financial assets. Instead of purchasing bonds or real-world financial products directly, users deposit capital into vaults, which convert it into RWAs and return yield coins that can freely circulate within DeFi. 2.1 core products inside the Nest Vault ecosystem. Plume collaborates with major TradFi players such as WisdomTree, Hamilton Lane, Supersecuritized to build multiple vault products with different risk profiles. Nest Basis, Basis, Nature, a partnership product with Superstate's USCC fund. Mechanism captures the basis spread between spot and futures markets for major crypto assets such as BTC, ETH, and SOL. This is a market-neutral strategy, meaning profits primarily come from pricing inefficiencies rather than market direction. EtherFi is already utilizing Basis as a foundational yield layer for its neobank infrastructure. Nest Treasury Vault, NTBL, plus Nature, tokenized US Treasury bills. Mechanism, considered the safest product within the ecosystem, with yields tied to US government bond rates, typically around 4.5% to 5.2% annually. NTBL operates on both Plume and Solana, allowing DeFi users to access one of the world's safest assets with minimal capital. Nest Black Opal, that's Nature. Supply chain and receivables financing. Mechanism provides short-term loans to businesses backed by receivables, generating higher yields but carrying greater credit risk. Nest Alpha, Nature, a diversified RWA index product. Plus, Mechanism functions like an on-chain ETF, automatically allocating capital into real estate, equities, and credit to reduce risk for passive investors. 2.2 Architectural breakthrough, RWA looping. If users only wanted exposure to treasury yields, they could simply use Ondo Finance or BlackRock products. What makes Nest Vaults attractive is its DeFi composability through the RWA looping mechanism developed alongside LoopScale. Deposit stablecoins into Nest, receive NTBL tokens, use NTable as collateral to borrow stablecoins, redeploy stablecoins into Nest, repeat. Assets such as NTable and NBasis gradually appreciate in value over time. Thanks to Plume's scalability and Solana integration, users can leverage these assets to build recursive yield strategies. This can potentially amplify APYs from a relatively safe 5 to 25%, depending on leverage levels. 2.3 latest regulatory update, May 2026. Regulation has always been the biggest bottleneck for RWAfi, but Plume recently achieved a major milestone. Bermuda license, May 20th, 2026. The Bermuda Monetary Authority, BMA, officially granted Plume a digital asset business license. This makes Plume the first on-chain vault manager operating under internationally recognized legal protection, placing it alongside firms like Circle, Coinbase, and Kraken within the region. Implication: this significantly reduces the risk of unexpected regulatory crackdowns related to public vault fundraising activities. 2.4 Risk analysis and weaknesses of Nest vaults. Despite its elegant design, Nest vaults still carries several important risks. Leverage risk, liquidation, high. If borrowing costs rise above vault yields or stablecoin liquidity experiences sharp volatility, leveraged looping positions could face mass liquidations. Counterparty risk, medium. Vault performance depends heavily on the quality and reliability of issuers such as Superstate or Black Opal. Centralization risk, medium. The fraud-proof system remains permissioned, meaning validation authority is still concentrated among selected nodes. One major advantage of the Nest Vault model is that it generates real revenue through asset management fees instead of relying on excessive token emissions like many older DeFi Ponzi-style models. Connection to Plume token value. As more institutions such as EtherFi and Squads Lab integrate Nest Vaults, total assets under management are expected to grow. Increased asset movement across Plume, Solana, and Ethereum would naturally drive higher demand for Plume as gas fees. The 3. Development team and institutional backing. Plume combines talent from both big tech and crypto-native ecosystems. Team. The project became the first blockchain-native entity registered as an SEC transfer agent in late 2025. Chris Yin, co-founder and CEO, formerly associated with Scale Venture Partners. Teddy Pornprinia, co-founder and chief business officer. Eugene Shen, co-founder, passed away in 2025. Team members come from Robinhood, DYDX, Zero, Layer Zero, JP Morgan, and Galaxy Digital. Backers, leading investors include Horn Ventures, Brevin Howard Digital, and Galaxy Ventures. Strategic support from MasterCard, Apollo Global Management, and YZ Labs. Other participating funds include Lightspeed Faction, Superscript, Hashkey, Nomura, Laser Digital, A Capital, and SV Angel. Total funding raised is approximately $30 million. Relationships with RWA giants such as Apollo and WisdomTree remain one of Plume's strongest advantages. 4. Tokenomics. The supply battle. Total supply 10 billion. Plume circulating supply approximately 4.8 billion. Plume current price 0.1227. Market capitalization approximately 72 million. Fully diluted valuation approximately 127 million. Sell pressure analysis. The period between 2026 and 2027 will be highly sensitive in terms of token supply, with roughly 4.7 billion tokens scheduled for unlock. Critical period from June to December 2026, around 212 million tokens are expected to unlock every month on average. If network usage and gas fee demand fail to grow proportionally, inflationary pressure could become severe. Plume utility. Gas fees used for transaction fees on the network. Staking. Validators stake Plume to secure the network and earn rewards. Governance. Used to vote on which RWA assets are eligible for listing. 5. Real-world metrics. Many platforms previously reported Plume's RWA AUM at over $500 million, but those figures appear to be outdated from mid-2025. Based on current DeFi data, TVL is closer to $57.62 million. Assessment. Plume appears to be pursuing a rural encircles urban strategy. While DeFi liquidity remains small compared to Ethereum or Solana, the number of wallets holding real-world assets is notably high. This suggests the community is more focused on asset ownership rather than pure speculation. Fab 6. Smart money perspective and risk analysis. Smart money positioning. Plus, no detailed disclosure exists regarding private round entry prices, but seed investors are estimated to have entered around 0.11 cents. At the current price of approximately 13 cents, early investors are only sitting at around a 1.3x return. Nevertheless, large unlock schedules throughout 2026 continue to create ongoing sell pressure. Key risks: security. According to L2Beat, Plume's fraud-proof system still operates in a permissioned mode. Liquidity. Despite listings on Upbit and Coinbase, liquidity depth for RWA trading pairs remains insufficient for large whale exits without significant slippage. Catalyst. Integration of KRW1 stablecoin and partnership with Securitize could potentially trigger over $100 million in new capital inflows into Nest vaults during Q3 2026. 7. Final verdict and rating. Total score, 58.5, high risk. Classification: high risk narrative-driven speculative product.